Hi, I'm Chetan Vora, working with Abakkus as asset managers in the investment team and track cap goods sector. Today, we would like to share our perspective on the cap goods sector. The first and the foremost important thing to track the cap goods sector are the three indicators which we closely monitor. The first one is the order inflow, which gives the indication on the underlying demand. The second one is the order book, which gives the visibility on the execution front of the companies in the years to come. And the third one is the capacity utilization, which gives you the visibility about the how much the operating leverage is yet to flow in for the companies. Now, for the year gone by FY25, because of the strong order book and the order inflow across the sector led by the power gen, T&D, renewables and the data center, the performance of the companies across the vertical was quite strong. Both the product companies and the project companies continue to benefit because of the underlying strong demand. Now, for the product companies, the B2B, which is the book to bill of anywhere above 1 time, is considered to be a good sign. And for the project companies, which are largely the EPC companies, the B2B of anywhere about 2 times is considered to be healthy. On the exports front, because of the current geopolitical uncertainty on the tariff, the macroeconomic factors and the global uncertainty, the export territory needs to be monitored quite closely. Now, what lies ahead? Because of the strong demand underlying, led by the strong order book and the order inflow, we are quite positive on the cap goods sector. Because of the first and the foremost, the thrust by the government in terms of the capex, what they have let down of close to 11.1 trillion rupees. Secondly, about the firmly placed policies and the schemes by the government, like Make in India, PLI, and the National Infrastructure Pipeline, China Plus One, and the government thrust to increase the manufacturing mix from currently 14% to 25% of the GDP. And lastly, the private companies which have not come on the forefront because of the strong balance sheet, the increasing revenue, and because of the good profitability, we expect the private companies to come on the forefront and take the charge in terms of doing the capex. Now, lastly, on the valuation, because of the strong tailwind in the last 2-3 years, we have seen the capital good companies valuations soaring at an all-time high versus the historical mean. But we believe that because of the order book and the order inflow trajectory, the valuation to be sustainable, and because of the government's thrust of the capex being induced in the system, we feel that the companies which will take the benefit of this and improve their earnings ratio will continue to warrant this valuation. Thank you.
All investments are subject to market risks. Please read all scheme-related documents carefully before investing. Performance and references to returns are indicative and does not guarantee any returns. Investor discretion is advised. This video is neither a general offer nor solicitation to avail the service of investment from the CB-registered intermediary under the services offered by Abakkus, nor is it an offer to sell or a generally solicit an offer to become an investor in the services offered by the Abakkus. The delivery of this video at any time does not imply that information herein is correct as of any time subsequent to its date. The contents of this video are provisional and may be subject to change.